Guys, welcome back to episode number 26 of Buy Smart, Live Smart, Sell Smart. Today we're talking about PMI, or private mortgage insurance. Just as a disclaimer, I'm not a licensed mortgage professional. These are just my personal assessments based on my experience and research. However, I can recommend to you locally trusted professionals. So if you're looking, don't hesitate to ask. Private mortgage insurance, or PMI, is not homeowner's insurance, nor is it a home warranty. All three are separate items, but that's for another video. Make sure you guys understand that PMI does not protect you, the buyer, or the homeowner. It protects the lender. If you're not able to put up 20% of your home's worth in cash at purchase, you have to get PMI. So generally speaking, PMI can range anywhere from 0.5 to 1.5% of the original loan amount, or principal amount. So why 20%? I'm glad you asked. So when a lender or bank approves a loan on a home purchase, they run their assessments and they conclude that if it comes to it, they can take that home and sell it at an auction for at least 80%. So if a buyer, which becomes a homeowner / the borrower, defaults on the loan and can no longer pay the loan back, the bank can at least break even or better on their investment. Let's just say that Joe Bob was buying a house worth $100. And let's say all Joe Bob could afford to do was put down $10. To avoid PMI, Joe Bob would have at least needed to put down $20. That's 20% of $100. Now with Joe Bob putting down $10, the original loan amount, or the principal amount, is $90. And because the loan amount was greater than 80% of the home's worth, the lender would attach a PMI as insurance on his monthly payments. After purchase, Joe Bob begins to pay the lender back on a monthly basis, and this is what we call mortgage payments. Side note, I'll make another video about what's included in a mortgage payment. So after a few monthly mortgage payments, when Joe Bob's principal loan amount drops to 78%, the PMI automatically terminates and stops. The other way is that if Joe Bob was paying attention to his principal loan amount each month, he can request the lender to terminate the PMI payments as soon as he submits his monthly mortgage payment that brings his loan amount down to 80%. Obviously, there are other variables that play into this, but that was a general overview of what private mortgage insurance was and how it stops. Guys, I hope this video helped, and as always, if you guys have any other questions, just contact me directly. But in the meantime, share knowledge, share network, and share compassion. See you guys next time.